The home buying process. Step 2. Your offer has now been accepted. This is an exciting time, as you're one step closer to owning a home. In this video, we're going to go over the following process: locking in the mortgage interest rate, earnest money deposit, loan disclosures and loan estimate, ordering an appraisal and homeowners insurance, submitting for the final approval. So, let's begin. Locking in the mortgage interest rate. Once you have the purchase contract, send me a copy so we can consider locking into a favorable mortgage interest rate. Mortgage interest rates fluctuate throughout the weekday from the opening bell to the close, so the original interest rate may or may not differ from when you were first pre-approved. Now that you're in contract, you'll be able to lock in the interest rate and secure the financing terms. Earnest money deposit. In your purchase contract, your realtor has negotiated funds that need to be deposited to the designated title company, called the earnest money deposit, also known as a good faith deposit. Earnest money acts as a deposit on the property you're looking to buy. Once the title company receives the deposit, the home is taken off the market and waiting for you to close. Loan disclosures and loan estimate. Since your loan is now live, we'll be sending you mortgage loan disclosures and a loan estimate, which you will need to acknowledge, review, and e-sign within 3 business days. These disclosures provide complete transparency of the home loan you are receiving. Disclosures reveal details such as the estimated cost incurred, the estimated monthly payment, and information about the escrow account. The loan estimate provides a comprehensive look into your loan. Here you can see the loan term, the loan product, and if the interest rate is locked, the loan amount you'll be financing, along with the interest rate, and the monthly repayment of the loan itself. Couple this with mortgage insurance, if there is any, and the estimated property taxes and home insurance combined. Property taxes and home insurance can be included with your loan repayment amount to give you a total monthly mortgage payment. This section lets you know if they're combined or not. Lastly, here's a glance at the estimated closing cost and what is the estimated cash to close, so you'll know how much you will need to bring with you on your signing date at the close of escrow. Along with the loan estimate is the closing cost details, which is a complete itemization of all the fees, costs, and credits for your loan. Section A contains all the fees charged by the lender. Section B is third-party fees for the services needed to move your loan forward. Please note, the appraisal fees will be an upfront cost at the time of order. Section C are still third-party fees, which you can shop around for if you're doing a mortgage refinance. However, if you're purchasing a home, the seller has already chosen a title company to represent the transaction. Section E are fees paid to the county of your new residence. Section F are prepaid items, such as the home insurance premium that come from the insurance agency of your choice. Most, if not all, require a full 12-month premium to be paid in advance. You can either pay this out of pocket or we can add this to your cash to close amount. Then, there's prepaid interest on your new loan. This is the interest incurred from the closing date until the end of the month. Prepaid interest can vary, depending on when your loan closes. The reason why you're prepaying the interest now is that you won't have an official mortgage payment until a full 30-day billing cycle is complete. For example, if your loan closed on September 20th, you will have prepaid interest from the 20th until the end of September. Then your first official mortgage payment is due November 1st. Lastly is your portion of the current county taxes, which varies depending on the closing date within the county tax cycle. This amount will vary depending on which county you're purchasing in. Section G are the initial escrow payment due at closing. If you have your property taxes and your home insurance impounded with your home loan, meaning you'll be making a one lump sum payment every month for the home loan, the property taxes, and your home insurance, we would need to establish an escrow account, and we'll be collecting around 2 to 5 months of property taxes and 3 months of home insurance. Please note, this is not a fee, nor are you paying interest on this amount. Think of this as a savings account that you're setting up to pay for your property taxes and home insurance. This is accumulated from your total monthly mortgage payment and then distributed by the lender when property taxes and homeowners insurance are due. Also, if you were to refinance your mortgage, the remaining balance in the escrow account will be reimbursed to you. Section H. Owner's Title Insurance, which is highly recommended in the state of California. Owner's Title Insurance protects the homeowner if someone sues and says they have a claim against the home from before the homeowner purchased it. And finally, Section J. Adding all the sections together, from Sections A, B, and C, along with Sections E, F, G, and H, gives us the total closing cost for the loan. Now, for the estimated cash to close. Simply add the remaining closing cost, plus the down payment on the loan, and then subtract your earnest money deposit, and you will get your estimated cash to close, which is the amount you will need to bring on the day of the final signing. Please note that any lender credits or seller's credit will be adjusted accordingly. Ordering an appraisal and homeowners insurance. For us to order the appraisal, we will collect the appraisal fee up front. This will be the only out-of-pocket cost to you for this loan. Then, it's up to you to find your own homeowners insurance. A simple tip: contact your current auto insurance and inquire about a home and auto insurance bundle package. But in case you need assistance, I have insurance agents on standby. Lastly, submitting your loan for final approval. Before we submit your loan for final approval, let's run down the checklist. Update your income and asset documents. Make sure we have updated documents for the recent 30 days for your pay stubs and bank statements. Find your homeowner's insurance policy. Once you've chosen your homeowner's insurance company, make sure to bind the policy. An insurance binder is a temporary policy that serves as a placeholder until the formal policy is issued. Provide any documents requested by your loan processor. During the loan process, your loan processor will request specific documents from you. We will need all those documents in hand before submitting your loan for final approval. Documents for your down payment. If you are using gift funds or liquidating any assets, we will need the documents to paper trail the source of origin. Lastly, we will need a clean appraisal report. A clean appraiser report will state no major deficiencies on the property and the home value comes in at the purchase price at the minimum. But if the property does have issues, we need it remedied or at least have an acceptable course of action in place for us to close the home loan on time. If we have everything from the checklist, our loan processor will submit your loan for final review to the underwriter. Assuming all the conditions are met, we'll move into clear to close status. I'll be sending you the third and final video of the home buying process. But if you have any questions, please contact me immediately.